Well, hello! Today I'd like to show you in this video how to find stocks that are oversold or overbought with the help of Finvis. Finvis is a great website where you can find, really lots of great things, lots of great information. With this one, you really can find some great information. Let me enlarge this Finvis for you so you can have an idea. I love Finvis because every time you turn on Finvis, you go log in into the website. On the top side, we really will tell you right here the Dow Jones, the Nasdaq, and the S&P 500. Right here you have a chart of all these stocks in colors that let you know more or less if it's green or red. Green means more bullish, red means more bearish, so they will go down. But at least you have a general idea of what's going on with the market at the moment before even you buy a stock. So if you see that there's a lot of red, I will not suggest you to buy right away the stock, unless you analyze, because if you have a lot of red, at one point the red will change to green and the stock will go up. But that is more like technical analysis that you need to work on and learn. But this one that I'd like to show you today is to find stock that are being oversold. Now, being oversold, a lot of stocks that they are good companies, at one point that we have to turn around and go to the intrinsic value or go to be overbought. Okay, so with the screener that you have on Finvis, that will be on the top right here, left side of Finvis. You just click right here. You have a lot of information. Now put this one, do you see fundamental, you see technical, you see all, so click to all. Okay, right here, click into all, you're going to see a larger screen right here. Now what I really like to look at the price, so I want, because right here we have 8,000 stocks. It's kind of too many to choose from, right? So you want a stock that is above, over $10 to $15. Let's place $15, okay? So from 8,000 stocks, we're going down to 5,000 right here. So you see there is a lot of less stocks to choose from, but still there are a lot of stock, right? So right here, you want the current volume of these stocks to be at least over 750K, because you want some volatility, okay? You really want to have these stocks to have some exchanging in volume, exchanging of stocks, so in and out. So you want some volatility in the stock. Now you really want to have some relative volume right here of at least 1.5. Now the 1.5, that means the relative volume was slightly higher, 1.5 higher than yesterday. So something happening here, okay? So you have a little movement. Right here, you go to RSI, Relative Strength Index. Right here, you're going to find a stocks that is oversold. You go down here and you say oversold 30. Now magically, you're going from 5,000 stocks to 48 stocks. So at this point, you're pretty good. You have a lot of choices right here, okay? Now, these stocks are oversold at the moment. So, being on oversold, you need to find a stock that is a good stock to invest that will go higher. Now, to find these stocks, you need to know first the intrinsic value of this company. So you mean the value of what company brings in and divided by all the share. So you can have an idea. Now to find that one, you should go to a website, is Wall Street, and they will give you the value of the company. Okay, so you can find that intrinsic value the company value of a share in any website. You can go to Wall Street, you can go to many websites. So you need to find the value. But right now, if you see, Alibaba is oversold. Now for this company, you can go higher, okay? Now, if you go down, you see Baidu. Baidu, that's another Chinese company. But I will stay away at the moment from Chinese companies. So look right here from the country and you see USA, USA, USA. Right here we have CDK Global, and you just have to find out what kind of company is that. We have Cree is semiconductor Cree. That's a company in the USA that is undervalued at the moment. This C-Web, that's another, but this one is like a China connected company ETF. So Argo Incorporation, right here we have iShare, this one USA. There is a lot of companies that you can find. Now you can play also with this price. Instead of $15, you can do above. You know, the slightly higher you go, the less volatility you find, and the more company with the greater value you will find. Now, I understand you will find company that is slightly higher in price. Be slightly higher in price is more expensive for you. I understand. But if you buy a stock that it costs $3 and tomorrow it's going to be $0 because the company went bankrupt, at that point, what was more expensive, a $100 stock or a $3 stock that tomorrow is going to be zero? So it's worth it to buy stocks that are slightly higher in price. Another thing, you should stay away from healthcare. You can buy stocks that are in a healthcare insurance. That's okay, you know, that's slightly better. But don't be in a healthcare that you're gonna be connected with the FDA, that tomorrow they're gonna approve a treatment for a medicine or a medicine, specific medicine for some kind of disease, that tomorrow this company, maybe the FDA is going to be saying no to this to this new medicine they're going to come out. So if they say no, your stock is gonna drop like 35% and you're gonna lose a lot of money. So stay away from healthcare companies. Now, this year, technologies company from USA, they ran really fast this year. So slightly at the moment they're, you know, slowing down, but technology is gonna advance so fast in the next few years. So at the moment, the few companies, they're really undervalued. Okay, so let's see. So those are the companies that you can find with a price of over $15, RSI oversold 30. Now, right here, you can go or even oversold 40, you know, and you're going to find more company. Or if you go even lower, you're just gonna find less companies that they have more shares, more chance to go up at oversold 10. Oversold 10 is really oversold. Oversold 20 is slightly less, so you have 8 companies. Now, this company, if you look, these companies, you have to study those companies before you're going to put the money in, because see the price, they're maybe $40 right here, that this company, technology, CDK Global, went down. Now, you really have to study the chart and see what's going on. Now, you can find this company and invest some money at the moment that they are oversold. Now, I will show you the chart. If we go to this company right here, let's see, one of the one went down, CDK, that is a technology company software application that USA. So we go to the chart right here, CDK, and this one is Thinkorswim. Thinkorswim is a great website and is a great platform where you can really visualize these stocks, and you can, you know, work on your chart. Okay, let's see, CDK. See, decay. Ooh, okay, this one are moving average and exponential, and I have the standard deviation lines on this chart. So this one will give you an idea of really what happened. Look like this company right here went down totally out of the standard deviation lines. So at the moment, if you invest here, there is a possibility that this stock will go higher from here. That's where the green line, that's where the stock's supposed to be, on this center deviation line. So this stock's supposed to be at 52, but at the moment it's $40. So there is a $12 to be made on this stock going up. But because the stock really went down hard, something happened on the earnings, because it looked like it went down for earnings. So some kind of like numbers on the earning that was not expected to be that kind of number. So everybody got scared and the stock got down. But if you research if this company is a good company and the intrinsic value is around $50, sooner or later this company will snap up, will go higher and reach $52 again. Now right here we can go to check another company that we have on Finvis that we was looking is, let's see, USA Biotechnological Internet Retail China. I will stay away from China. Treehouse Food, THS. Let's see, it's a $36 THS. This one is packaged food, auto truck dealership. I will check this THS. Let's see, we go to right here. This one is Thinkorswim platform, and this platform is really great when you start to work on it. Okay. Now right here, you see every time we hit a high on the red line, on the standard deviation line, we going down. Okay. Now this line, yellow line, is the 50 moving average. Okay. The other lines are different moving average. That we have, like the red one is a 5 moving average. That we have the 13 moving average. Okay, so those are very important because they let you know where the stock is going to go at the moment. Now look like it right here, the stock was holding on this red line for now, that it was a standard deviation, the standard channel, deviation channel, and this one was trying to hold right here, but look like the lines came on top. But usually when the lines are coming out of the standard deviation channel, usually they curve back up. So this stock should be going up again to $48. But I will give him at least like, let's see, around 3 months. 3 months to go up and back right here. So yes, you can invest your money right here on this company, then in the future it's going to go up. But really you need to go to the numbers, to Yahoo Finance, look the numbers of what this company is bringing in. You want to see the numbers of money coming in and cash flow in the company, and then divide all those numbers between the shares, outstanding shares that there is in the company, so you can really have an idea of what is really the value of the share, the real value of the share. Because sooner or later the company, if the value of the share are around $50, sooner or later this company will go higher in the long term. Because in the short term the market works with emotion, in the long term the market works with fundamental numbers. Okay, because if something is value $100, sooner or later will go to $100. But before that, before even to go to $100, there is a lot of emotion, because market in the short term is really driven by emotion. Emotion are really difficult for people, because someone is fear, someone is greed, and that's really, they are banging together all the time. So you really you have to think about emotions, okay? Because you might buy the stocks and that's the value you say is $50, but if you cannot handle the emotion and the fear of this stock could be going more down, you're gonna sell the stock. That's emotion. That's how, behind all those candles, behind all this system, there is real people trading. So if people are scared, they're gonna sell these stocks. Like there is panic right now selling the stock. But this stock, if the real value of the stock is about $50, sooner or later this company will go up. So you can buy this one right now. That is about $35 or $36. You can put a stop loss if you wish right here at because this one is a support line. That's the last time they was down here, right? You can put a stop loss at 35. So if this stock will go down to a 35, your order will sell. So that's how market works really, because this stock will go down here and gonna bounce higher, okay? And from there we'll go back to the green line. That's how you really play with the oversold stock, okay? Now there is other way to play with this one, that it will be with options and do a put credit spread and get money out of these stocks even if it's not going to touch the strike price of the option. But that's a little more advanced, a little more difficult. But that's how you should find stocks that they are going higher from here. Now if you look down here or my Thinkorswim on the bottom part, I have the MACD, and the MACD sooner or later they are going to cross and they're going to bring these stocks higher. Now if you look right here, the RSI at the moment they are oversold, and they're being oversold for about like a week and a half, almost 2 weeks, okay? So it's time for this stock to rebound and go back up, okay? So this one is one way to check how to find oversold stocks, okay? So going back to the screener, if you are here leaving the same all the information right here with over $15, let's see, over 1.5, over 750, right here you want to have a overbought. You want to have stocks that really at the higher they're overbought. Let's see, at the 80, okay? Now this one will change. You can go 70, because if you do 80, there is very little stocks that are oversold at the moment, because also today was not really one of the best days in the market. Now what you can do an average volume right here of over 500k. So you want to have stocks that add a little more volume, okay? Now if you look right here, these stocks are overbought, okay? It's very easy. It's a very easy scanner, screener that you can do on Finvis. Every day after 6 p.m. you can do this screener and identify some of the stock that they are overbought and oversold. Now I show you oversold, you can buy a stock and the stock is going to go up if the intrinsic value is higher. If the intrinsic value is lower, that stock will keep going down. So pay attention. You need to do some numbers. You don't really want to play with stocks that they are very dangerous, because you can lose money. You don't really want to play with stock unless you study that company and you see the numbers. How much money are they bringing every quarter? Okay, you want this company to be profitable every 3 months. Okay, if they're not profitable, if they're not really great company, and sometimes they're not consistent on bringing the money in, they will have a really weird chart, not stable chart. So you want something that is really stable, okay? So you really want to see the numbers, and to see the numbers I will make a video sooner or later how to see the numbers of this company. But right now, with this screen, you can see what's really overbought at the moment. Now, right here, you're going to see, let's see, KR. Okay, KR. Now, let's see. We go to Thinkorswim, and with this chart that is pointing on the daily, okay, KR, with this KR, there is a Kroger company and is a food company, I think supermarket. This one, you can see that the green line, that's where really the stock has to be, okay? That's where is the location of the stock. Actually, it can go higher, but can go on this line right here. That's a standard deviation, is a one standard deviation, you know, extension. So if we go into the red standard deviation, there will be two standard deviation. At that point, you have a 99.9% that this stock is going to come down. Now from here, it can stay, you know, for a few days in this line right here, following this red line. But after that, stock is getting tired. After it's getting tired, you're going to see this red line. That is a 5 moving average. The 5 moving average, it calculates automatically the last 5 candles and will give you an average position of the stock. Now, if the stock is getting too far away from this 5 moving average, okay, and we snap back on the 5 moving average. Now, if the stock is getting too much away from the other line, that is, it will be the 8 moving average, is a white line. At that point, we'll snap back on the white line. But when you see the red line, that is a 5 right here, you're gonna see this line right here, that is an SMA, a moving average. You're going to see this one crossing the white one. At that point, the stock will come down, because nothing can run forever. Okay. Now, the value of what the chart tells me of this company is around $40. Right now the stock is $46. Now you tell me I cannot buy a stock at this point, right? Because if I buy the stock gonna go down. Yes, you're completely right. This stock is not to be buy right now. That's one way you should see it for you that you're a beginner. But for me that I'm an advanced trader, I can tell you that I can make money here by buying a put option going down. Or what you can do, you can even borrow share from your broker, borrow and play your position short. Placing a position short, that is kind of slightly risky, because sometimes the brokers ask you too much money to get these shares from them, because you're gonna borrow share. But at the same time, you really want to be sure that this stock will go down, okay, because you're gonna have a little more risk borrowing shares. Now, another thing you can do, you can buy a call credit spread with the options. Call credit spread is slightly easier, but if you can, you can search online, or you can search on YouTube how to make a call credit spread. Before you do it, make sure you learn, make sure you play little money. Don't play a lot of money, because you can lose money too. Call credit spread, they look like you pay a little money, but at the same time you can lose a lot of money at the end. You need to know what you're doing before even you invest your money. Now, if you want to play in the market, it's like a play in the market, but if you want to invest in the market and making money out of the market consistently, I suggest you to paper trade for at least 6 months or more. Now remember, I'm not a financial advisor, okay? Whatever I tell you, you should not do it, okay? So, you should test what I tell you. You should look what I tell you. You should understand before you invest your money, okay? So This one is one company, KR, that I kind of like it at the moment, and it should be going down. Okay. Now this one are company, they're being overbought at the moment. So let's go back to Finvis. Same, more or less, we have the same stocks right here, and you go down. And you go down, you choose, and you look what's really, overbought at the moment. Or overbought at the moment, S&P. Try to choose an American company. I can say, it's not because I love USA companies, but they're more stable because there is more regulations. Now S&PS look like a technology company, software infrastructure. Now infrastructure at the moment is going to be better if the new president will give this new bill on infrastructure a go. If this new president will give you a go on this infrastructure at the moment, we could make a lot of more money. Now, this point, S&PS is overbought, okay? Because everybody jump on it, But what if the president or the government is gonna say no infrastructure bill is gonna go through right now? So this company is gonna go down for a little bit, not really a lot, because infrastructure is really a big sector. So being big sector will take you not really a lot to go down. So, but it's not gonna go down like a rocket, but it's gonna go slightly down. So let's see this one, S&PS. That is really at the moment S&PS. There is let's see, S&PS. That at the moment is overbought. No, something is not right. S&PS, right here. This one is a bullish engulfing candle. It's totally really a gap candle right here. It really jumped higher, and it went higher from around 288, and the day after was up here to 317. So it kind of ran too high at the moment, but it still has a little more room to ride right here, to run, and that from there it should be going down. But at the moment is already kind of escaping away from the moving average. So escaping away from a moving average, you cannot escape from forever. So look like that they had earnings, and the earnings went pretty good, and really they went high. Now it can go even higher, and when it go higher, at that point it's time to sell it, or if you own the stock, or at that point it's time to buy a call credit spread on the top, about $5 to $10 over the top. So above 332 you can buy a call credit spread where you're gonna make a little money, or you can borrow share from a broker. But now it's not easy. Some stocks are not really easy to borrow from the inventory of a broker. So now at that point it's still risky, because it's something obvious for a company, for a broker, that these stocks are going down. They're gonna charge you a lot of money for you to borrow the stocks from them. So it's really, you really have to check the profit and the loss. You have to check your risk and rewards. So before you move, you need to check the numbers. You need to put your numbers down and see how much are you gonna make, or how much you're gonna lose, or everything in total. Okay, right here you see the RSI on my thinkorswim right here, and you see that the stock at the moment is overbought and is above. Right here we have the MACD, and the MACD is still slightly crossing, so look like the stock still wants to go slightly higher. So at the moment this stock is really bullish. Okay, so let's see what's going to happen tomorrow. So don't be in a rush, don't be in in the frenzy of buying a stock when the stock goes up. Maybe when you buy a stock that went up because everybody tells you to buy the stock, do not buy, okay? Because if everybody tells you buy, maybe there's time that it's time to sell it, because you know, that's what it is. So please, before you buy any stocks, you have to analyze a chart, okay? So going back right here, we're going back to the screener, and I show you another one that is, let's see, Energy Corporation, ETR, let's see, USA, and this one is another stock that's overbought at the moment, okay? ETR, let's see, do I go to Thinkorswim, and I will show you on Thinkorswim, ETR, boom. ETR. See, look, right here, there is a possibility that this line, that is a 5 moving average, will cross on the 8 moving average and will bring this stock down. Now, many times market repeat himself. But remember, market repeat himself, but doesn't have to repeat himself all the time. You will be surprised how many times the market will not repeat himself. And you was hoping that the market was going to repeat himself. So at that time when you are hoping, you lose money, okay? Because hope doesn't exist in the market. You cannot trade with hope. I hope this stock is gonna go up. You really have to have an idea of what is going to happen. Sometimes you have to wait, because right here you see the stock is really bullish, okay? It's going up. You know, you have to be at the right time there to see that this red line, that is one of the moving average, will cross to the white one. At that point, you could buy this one short and going down. This is one of the stocks that at the moment is overbought, okay? Now, because look, the first one went up here, okay? 1 touch, 2 touch right here. So on this with standard deviation line, 1 touch, 2 touch, 3 touch, 4 touch. Now they say that after the third one you have a gray one, because this one is kind of like a double bottom right here, and then you have this one, a burst coming up, okay? There is more green candles here than red candles, okay? So that means these stocks at the moment is really bullish, so it can go higher. Now before it's going to go down up here, you're gonna see a shooting star. A shooting star is like this one right here. That's a shooting star. You see a long wig on the top and little small body. One right here, one up here, okay? That's the signal that the stock will go down from that point on, okay? Now at that point it's gonna try to find the support on this green line that will be the standard deviation line, okay? So before you buy a stock, you have to check on the chart, okay? Now you can find all these stocks right here every day. Run this simple. This one is a simple screener that you can run every day around 6 p.m. to see if you can make a plan for the day after, because the money are made before the trading day. Money are being made with planning, okay? It's very important. Planning is one of the most things you can do in stock trading. Okay, at this point I hope you enjoyed this video. This one was a really short video on the screener of Finvis to teach you where you can find overbought stock and oversold stocks that you can profit from. I'd like to thank you very much to watching my video. Please subscribe to my channel, click the like button, and remember, I'm not a financial advisor. I only give you ideas. Thank you very much. Have a great night.